Welcome back. Now, Old Mutual has grown full-year adjusted earnings buoyed by rising demand for short-term insurance and wealth management products in South Africa. The group says that disciplined capital allocation in new growth engines and investments in operational efficiencies boosted earnings. Old Mutual CEO Iain Williamson joins us now with more detail. Thank you so much for your time, Iain. Can you please characterize the level of growth that you saw in this reporting period?
Yeah, so we saw I think as you mentioned in your opening remarks, adjusted headline earnings per share up 17%. So, really happy with that result, as well as with the consequential increase in our return on net asset value, which was up to 12.6%. That's been a journey we've been on for a few years now to drive that return up, because that's a key number for our shareholders. So I'm really delighted that we were able to deliver the earnings growth, because the macro environment last year was very tough. So I think the teams have done a fabulous job.
All right. Well, I did see that Old Mutual saw softer profits in the personal finance division. What were the challenges there?
So if you cast your mind back, well, most people won't remember, but those of us close, if you cast your mind back to our interim results at the half year last year, we suffered about a 300 million rand loss from mortality claims. So essentially a large number of customers passing away and claiming for very large amounts. So we saw double the normal volume of claims of above 10 million rand in that period. Fortunately, in the second half, that normalized.
Okay.
So we didn't see it repeat, but it did. Obviously, the pressure from that number, you couldn't make up a number that size by the time we got to the full year. So that was the one issue.
Yeah.
And then the other side of things was a bit of a technical point around just interest rate movements and how assets and liabilities move against each other. So that cost us money as well.
Well, as much as we are seeing green shoots in the economy, that hasn't really filtered through to real income growth and stability in the consumer. What does your persistency experience then look like in the cycle of the economic climate?
Yeah, look, it's been tough. So persistency was definitely one of our challenges last year, particularly in the Mass and Foundation Cluster business. And it is related, as you say, to the pace of economic recovery. We had anticipated that interest rates would cut faster than they did, and therefore we thought that the economic recovery would come through a bit quicker. So that was tough. I think it's also fair to say that it was a year of two halves. The first half of last year was like really tough. And the second half was a little bit easier. And you can see it in things like our credit loss ratios, the defaults on credit decreased literally almost month on month every month last year, to the point where in December they were actually quite respectable. But we haven't yet seen that come through in persistency. So I'm interpreting that as saying that consumer balance sheets have got to a place where they're able to meet their contractual obligations, but they're not yet able to have much discretionary spend available to do other things with. So I think that will require a little bit of further relief, and hopefully with the full effect of the 2 interest rate cuts we've seen starting to come through, the public sector wage settlements that will come through next month, and some of the private sector wage settlements we've seen, which have largely been above inflation, particularly in the lower income bands. I think we should see a little bit more relief on consumers on a forward-looking basis, but we certainly haven't seen the sort of exuberance around the government of national unity, the equity markets, the currency, inflation. All of those things haven't yet come together in a consumer outcome. So I think hopefully that will still come through.
All right. Well, one of the main focus points in this industry is new business, value of new business. I do note that there was some softness, but coming from a higher base. Would you say that we are maybe at more normalized levels?
Yeah, I was comfortable. Most of that you saw as softness was really volume related. So our margins have held up well. In fact, our margins have gone up. So it's really just a bit of volume pressure. Some of that is because we had an enormous, very nice, large deal in our corporate business last year, which didn't repeat this year. So there is some lumpiness in that, and that business is traditionally quite a lumpy business. So I wouldn't read too much into the trend line, as it were. I think it's more of a one-off change.
All right. Well, Iain, I think I have two more questions left within the time that we have until the end of the interview. Let's drill into your diversification drive, particularly with the introduction of OM Bank. I do note that there's a lot of progress that has been made there. What is the main goal in terms of what and who you want to attract with the bank by the time, of course, that it does launch in the fourth quarter of 2025?
Yeah, so the bank now has a license, which means we can take deposits, which is fantastic. Okay. I have an account. I opened it yesterday. It took me all of 5 minutes. I now have 2 physical cards, 3 accounts open on my app, and a real-time link into the Old Mutual Rewards program. And I was able to cash in my Old Mutual Rewards points and use them to, initiate a balance into my bank account all in about 10 minutes. So that was a really great experience.
Amazing.
I'm really proud of what the team has done there. Strategically, what the bank does for us is it gives us access to a set of customers where we think demographically maybe they wouldn't have purchased our existing products before, so typically younger.
Okay.
As well as it gives us a competitive string to our bow that we haven't had in the past in terms of just the breadth of solutions that we bring to bear. And our whole integrated financial services strategy has been very much around broadening the capabilities that we have and linking them together in a way that adds value for customers.
Yeah.
It's also a defensive play, if I'm honest. Our biggest competitor in South Africa is Capitec. We know how formidable they are, and we launched our unsecured lending business in 2008 as a competitive response to Capitec's presence in the market. And in a way, you can see this as a similar logic from a defensive perspective. So I think I'm excited about it. I think the team have done a really fabulous job. And, if this bank is as successful as I think it could be, we pivot our entire retail business in South Africa behind it in years to come.
And of course, with this competitive landscape, there's really a lot of pressure to diversify, as you are doing, for example, with OM Bank. And that comes with a lot of investments. And a lot of the time, investors are trying to gauge how much you are letting out of the pocket in terms of your investments for these new initiatives. How are you navigating that, and also just being prudent in your capital allocation?
Yeah, so we very cash generative. We generated 158% of earnings as cash last year, so through optimizing our balance sheet.
Yeah.
So we have a very strong balance sheet and a lot of what we call discretionary capital available to us right now. We've tried to guide the market quite explicitly on the investment in the bank, and what we said today was that we expect to make a loss of about between 1.1 and 1.3 billion rand for this year in the bank. And furthermore, we would expect the bank to break even by 2028. So you can infer from that, we'll be investing through our income statement into the bank for 3 years, and with an initial starting cost, if you like, of that 1.1 to 1.3 billion rand. So I think that's clear, I think, for shareholders around what we're asking them to sign up for.
Yeah.
And, we'll obviously keep everyone updated as the bank expands and as we progress it.
All right. Well, thank you so much for your time, and looking forward to seeing the progress in OM Bank as well, and really its role in the banking sector. Appreciate the time, Iain. That was Iain Williamson, CEO for Old Mutual.